It all started in 2009 when a mysterious figure named Satoshi Nakamoto launched Bitcoin. No fanfare, no press release, just a white paper, some code, and the first block of a new kind of money, decentralized, permissionless, and unstoppable. Back then, one Bitcoin was worth literally nothing. You couldn't even trade it for a sandwich. In 2010, something historic happened. A guy named Laszlo bought 2 pizzas for 10,000 BTC. Today, those pizzas would be worth hundreds of millions. At the time, just a casual flex in the early crypto scene. By 2011, Bitcoin had competition. New coins like Litecoin and Namecoin popped up, trying to improve on Bitcoin's speed and utility. The idea of altcoins was born, some serious, some, let's just say, experimental. 2013 was the first real price boom. Bitcoin hit $1,000 and suddenly people were paying attention. Media coverage exploded. Government started asking, "What is this thing?" While your friend who mined Bitcoin in college suddenly became very smug. In 2014, Mt. Gox, the largest Bitcoin exchange at the time, was hacked. 850,000 BTC vanished. It was a massive setback and trust took a hit. But the crypto world kept building. By 2015, Ethereum launched. Unlike Bitcoin, Ethereum wasn't just digital money. It was a platform. It introduced smart contracts, self-executing code on the blockchain. This changed everything. Crypto was no longer just about coins. It became programmable. From 2016 to 2017, things got wild. Ethereum exploded. ICOs, initial coin offerings, became the new crypto gold rush. Anyone could launch a token and raise millions overnight, often with nothing more than a website and a dream. Or a scam. 2017 was peak mania. Bitcoin hit nearly $20,000. Ethereum soared. People were mortgaging houses to buy crypto. It felt like the future, and maybe a little bit like a bubble. In 2018, the crash came. Prices tanked, projects disappeared. The term crypto winter entered the vocabulary. But under the surface, the technology kept evolving. By 2020, DeFi, decentralized finance, took off. Apps like Uniswap, Aave, and Compound let users lend, borrow, and trade without banks. It was finance, rebuilt from scratch. Meanwhile, stablecoins like USDT and USDC became essential, helping users escape volatility without leaving the crypto world. Then came 2021, the year of NFTs. Digital art, profile pictures, virtual land. Suddenly, JPEGs were selling for millions. Ethereum gas fees went to the moon, and everyone became an NFT expert overnight. Also in 2021, Bitcoin hit new all-time highs, crossing $60,000. Big institutions entered the chat. Tesla, Square, MicroStrategy. Even countries got involved. El Salvador made Bitcoin legal tender. But in 2022, the mood shifted. Luna collapsed. FTX imploded. Billions vanished. Trust in centralized platforms took a massive hit. People realized that even in crypto, human greed still breaks things. In 2023, the crypto space was in rebuild mode. Layer 2 networks like Arbitrum, Optimism, and Base were gaining traction, making Ethereum faster and cheaper. Developers returned, and although the market was cautious, innovation didn't stop. Regulatory pressure increased, but it also brought clarity in some regions. The foundations for the next wave were quietly being laid. 2024 was a turning point. Bitcoin's halving reduced new supply, and institutional interest surged with the approval of spot Bitcoin ETFs in the US and other major economies. Prices climbed again, but this time the rally felt different. Less hype, more infrastructure. Ethereum rolled out major upgrades, slashing gas fees and boosting performance. Meanwhile, real-world assets began moving on-chain. Stocks, real estate, even bonds. The AI and crypto worlds began to intersect in more meaningful ways. Decentralized AI projects emerged, combining on-chain data with AI models, and new marketplaces allowed for training, verification, and use of models in a trustless way. Not just buzzwords, actual products with real users. And yes, meme coins refused to die. Pepe, Doge, and a dozen new animal-themed tokens once again reminded everyone that memes still matter, and that the crypto market doesn't always make sense. By 2025, crypto has matured, but it hasn't lost its edge. Regulation is clearer in many countries, leading to a new wave of compliant DeFi platforms and tokenized finance. Wallets have become simpler, onboarding smoother, and mainstream adoption is no longer a dream. It's happening in pockets all over the world. Crypto today isn't just Bitcoin and Ethereum. It's DeFi, NFTs, DAOs, gaming, privacy tech, and more. It's messy, it's noisy, but it's also evolving, fast. From a cypherpunk experiment in 2009 to a $1 trillion global ecosystem, crypto has come a long way. And we're still early.